technically, I think we've already seen a default on the Comex because they're showing bar inventory on the Comex. So if I'm standing for delivery, for gold bars, why can't I get delivery of that gold? So it's telling me that they don't have the bars to deliver.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And once again, it is that time of week for the weekly silver and gold update with Dave Kranzler. Another fascinating week in the markets. Not too much movement in the price, but we will dig into all of the latest developments. Although, Dave, as I think you're well aware, today's episode is actually sponsored by Miles Franklin, where you can buy or sell gold, silver, platinum, or palladium. And fortunately, Andy, for our listeners, is matching or beating best price. So you can find out more about that at Arcadia at milesfranklin.com. And Dave, right now, if you take advantage of that, you can load up, and we're even tossing in an audio copy of the big silver short unqualified orders, which you were a part of. In fact, you're chapter 1, which people have already been listening to. So
Uno.
That's all the good stuff. Arcadia at Miles Franklin. And with that said, Dave, now that I'm sure you're impressed by my silver blocks behind me, how are you doing today, sir?
It's great. It's you know what that is? That's basically precious metals porn as far as I'm concerned.
Well,
That's the adult version of the famous Farrah Fawcett poster that every kid when everyone who's my age had hung in their bedroom when they were a kid.
well, I'm glad I'm catching your attention. I won't tell everyone that I even had you. It was close to meditation before we started. I don't know what you'd call that, but in either
In your meditation. Hey, I got a quick question here. So Miles
Sure.
Franklin sells gold, silver, platinum, and palladium.
Yes, sir.
What about lead, as in ammo?
I don't think that they are currently selling ammo, but you could, again, you could look in the description below, and you could see that Arcadia at Miles Franklin, where you can send those requests. We'll check on it for you. We could probably store your ammo, so you can keep that in mind. Although, on to serious matters there, Dave. If the premiums keep rising like they have been, where right now it's interesting because I know Miles Franklin is paying above spot to buy metal. If that continues on where it's like, we have this Comex price, it's about $15, but if you want a Silver Eagle, it's north of 20. So at some point, and maybe we're not there yet, but the longer this continues and as premiums rise, aren't we set up to find out whether there really is any physical delivery mechanism to the Comex? Because there's essentially an ARB on the board. And it, again, like we talked about last week, it feels like to me, from what I read in here, like the drain on the London gold pool. So with that said, I'm going to switch to my basement here, and you take it away.
I mean, you're asking, is there a way to tell if the Comex is running out of the physical supply of gold and silver that it can deliver into people who stand for delivery and want to remove the gold or silver bars from Comex vaults? Is that essentially what you're asking?
Well, I'd like to know that as well, although perhaps a precursor to that is that, maybe this is a sign towards that happening, but at some point, let's say, if you want to get junk silver at some, and premiums are up and now junk silver costs $30, and maybe we'll check in of what more about that whole refinery supply chain is like. But at some point, if there's no metal out there and there's some ability to take delivery, I don't know, do bullion dealers or refineries get together to get products so they can stay in business? It's like the pressure is building because you have an ARB on the board. You can simultaneously take their $15 silver, and if you find net out the refining costs and sell it at $30, I'm not saying we're there yet, but isn't this heading towards that?
Well, you wouldn't be able to refine it into sovereign minted bullion coins. That you couldn't do that. I mean, what you could do is, you know, I mean, I don't even know where you would send it to get refined if you can get the bars. I mean, first you're assuming that you can source the bars, right? And I haven't been surfing around to see the silver inventories I mean the non-bullion coin. When I say bullion, I mean sovereign minted bullion coins, like Eagles and Maple Leafs. So I don't know what dealers like Miles Franklin have in terms of, say, 100-ounce silver bars or 1,000-ounce silver bars or even 10-ounce silver bars. So, but let's just say you could somehow get a hold of the blanks, and then you could send them to a refiner who would maybe refine them into private label silver. So you could pre-sell those, I guess. I mean, yes, there in a way there is an arbitrage, but that's part of the reason why the arbitrage isn't closing. It's not, and we've had about an $8 or $9 spread between minted coins and the spot price of silver now for what, 8 weeks, something like that,
Yep.
12 weeks, whatever it is. So normally, if you could arb that out, it would have been arbed out already. So, right? I mean, that's how markets work. If there's an easy arbitrage, it disappears like that. But there's not really a way to make that happen. So, and it's really, it's the same thing with gold. I mean, why is there a persistent spread between the front month contract and the spot price of gold? So,
Actually, that's a great question. Maybe you could dig into a little more, because I've been thinking about that a lot. And I wonder, do these two metrics show basically a growing risk premium? And maybe that spread isn't wide enough to make it economic. Like, it's like sometimes you have silver, but at the current price, it's not economically viable. Maybe there's not enough edge currently on the way the markets line up. But so again, to be clear, I'm not saying that we're at that point yet. But I mean, I wonder at some point, because the public is buying out what is available. And again, I know this isn't the first time this has happened. Same thing happened in 2008. And I remember back then, Andy mentioned, and he talks about it in the book, how he thought he was going to go out of business because when silver was dropping from 21 to 9, at the same time, Bart Chilton confirmed that JP Morgan was making their position bigger, there was no silver. He didn't have a product to sell to his customers. And it wasn't just his shop. This was across Europe. Finally, the mint comes back online. Comex says silver is $9, and here's your silver eagle for $17.50, even before they're selling a markup to the public. So it's just like at some point you think, if the spreads widened further, I don't know, at $35 or $40 silver, if there's no product, I wonder if people then say like, all right, I don't need a silver eagle. But it, at least on the retail level, and including our conversations and the other folks I've talked with, I have yet to hear anyone suggest that is associated or close to the situation or a dealership that this is getting resolved anytime soon. And if the demand keeps up, I'm wondering how that resolves.
at some point you'll see people who bought a lot of silver at much lower levels probably start to reoffer it to the dealers, and it'll bring some of that out. It's not going to fix the problem, but it'll give them a temporary reprieve. I mean, let's kind of think about this in terms of what's going on in the wholesale gold market rather than the retail coin market, because and I don't know, maybe this could be a case where the retail market is foreshadowing where the physical market is going. I mean, again, it's to me, it's the only reason that there's a spread between silver eagles and the spot price of silver is that um, to me it tells me that they're, well, first of all, we know that the mints are closed down, although I didn't the mint start up again.
I mean, it seems like it's been going back and forth.
So I'm not really sure. So
I believe as of yesterday, Eagles were, you can't get them today.
okay, so I don't think that spread is fully explained by the fact that there's a technical kink in the market where there's not enough supply of eagles and there's too much demand for it. But to me, I think the more interesting proposition is why is there such a spread between the spot price of gold and the front month June contract? I think it's something like 20, $22 right now, and it's been persistent. Now they're giving us a cock and bull story that, oh well, it's just a function of the not being able to move the bars around and deliver them, blah blah blah. Well, that's total bullshit, because you should, if they really have the bars, you should be able to arb that spread out, and that spread has been persistent for several weeks, right? I mean, I was thinking about this a couple days ago. It's like, why wouldn't I go out and short the piss out of the June contract and go um, take delivery of bars in London? I can just do it over the phone, a couple phone calls. Well, it's telling me that the bars aren't there to be delivered.
Yeah.
And you can't, so therefore you're not going to take any risk arbing out that spread, right?
No.
If you go out and try and arb it by shorting the June contract, and all of a sudden you can't source the bars, you're screwed.
Yeah,
So honestly, I think technically, I think we've already seen a default on the Comex, because they're showing bar inventory on the Comex. So if I'm standing for delivery, for gold bars, why can't I get delivery of that gold? And there's enough commercial trucking movement that you could go and remove, load out the bars from the Comex vault. You don't have to go into New York City. You just go into Delaware. I know I have a friend that lives in Delaware. The restrictions, the shelter in place and lockdown restrictions aren't as strict there as they are in New York City right now. So it's telling me that they don't have the bars to deliver, and that's why they tried to fabricate this 4GC enhanced gold contract that gives a Comex trader the ability to take a 25% interest in a 400-ounce London LBMA bar in London. Well, what the hell do I want that for? I want the goddamn gold, and I want to be able to have it in my possession if I'm going to put up that kind of jade.
Dave, but didn't you read that announcement they made that it was like they're using the no more disclosure, the secret announcement, the Freedom of Information Act, they were removing that. So that the fact that they can't even report it, even promise to report it, I thought that would make you feel more comfortable about the new contract.
Oh,
I mean, it's like a Three Stooges routine. It's
the fact that they float this bullshit out there and expect serious, precious metals students and investors to actually believe it is just, it's mind-boggling.
I mean, could you
like,
imagine?
It really speaks to the absence of rule of law, in the UK and in the United States.
Could you imagine Ronan Manley against the Comex in a courtroom setting where you had disclosure and you couldn't perjure yourself? I mean, it's like the guy sits there and writes these articles a couple times a week where somebody go up and challenge it. I mean, it's, and I guess the other thing I've been thinking about this week is that essentially, like the Comex, it's almost like the Fed, they're making a mockery out of themselves at this point, where it doesn't, it's like, what does the Comex price matter? It kind of like at some point it'd be like if I say the Chris price, you know, and like, all right, my price is $30 an ounce. Like nobody else cares, but you know, again, here for people that actually want silver, I mean, you've talked before about how, you know, good luck with GLD or SLV. Again, you know, there's a growing spread there between there and physical. And I think what we've talked about for years, you and I, and you going even further back, you know, it's happening now where the physical price has divorced itself from the paper market.
Yes, I mean, it tells you the market's broken,
Yeah.
and it's broken for a reason. And you know, the good analogy that I've seen out there is look at a chart of the price, the front month or the, you know, I guess it would have been the May contract price of oil. You know, it goes straight down like toward your information at the bottom of your screen, and the exact opposite, the mirror opposite, is what I think is going to happen in the gold market. I do think at some point you're going to see the spot price of gold, and I'm talking about the spot price of gold as it's set at the LBMA fix, is going to do a moonshot. And what would cause that is all of a sudden, you know, big serious buyers, whether it's Eastern Hemisphere central banks or extraordinarily wealthy families living in Switzerland, all of a sudden are getting freaked out by all the money the Fed's printing, because a lot more printing is coming. And they decide to go onto the LBMA and try to take delivery of bars via a representative at the London fix. And all of a sudden you see the price start to go like that because they're bidding for a lot. And, you know, but the thing is, they're gonna want to demand guaranteed delivery, immediate delivery and loadout from London vaults. So I think that's the dynamic that's going to cause the spot price to soar. And then what I think you'll see happen is the Comex futures will start to go into backwardation, meaning the front month price will be higher than the further out price. And that'll reflect the expectation that you're probably going to see cash settlement on the Comex. They'll call force majeure for some stupid reason and say, oh, see that your Comex contract there that you're long, there's a force majeure clause buried in it. We can settle you in cash. And so then what happens is the futures invert into backwardation, because the longs are like, well, you know, well, first of all, a lot of the further out longs will start dumping their contracts. So they know they're not going to get gold anyway, and that'll depress the price. And the front month contracts or the current month contract, like right now, the current month contract is May, and there's still April contracts that are open that, you know, the longs are standing for delivery, waiting to get noticed from their counterparty. Still over 400 contracts on in the April month. They may just decide to settle for cash because they're getting the cash right away. And part of the reason that the futures would invert is it'll reflect the time value of money, right? So if you're holding an August gold contract, you know, you got to calculate, you know, some sort of net present value calculation. If you're holding on to it, because you think maybe gold will magically show up by August and you can stand for delivery and get it, or you'll just say, oh, well, my worst case is I'll stand for it, but I'll get paid in cash. And I know the Comex won't default on that because the Fed will just print money and give it to them like they're giving to every other freaking bank-related organization under the sun. So that's how I think this probably plays out. And I think, I mean, I don't know, I would never put a time frame on this, but I think it's that scenario could unfold this year.
Yeah, it sure seems like it's happening. And by the way, Dave, all this gold talk, I guess while we're getting into this, I wanted to show you, as you can see, I got some silver from Miles Franklin this week. So I bought a new place, or no, actually I rented it because at today's real estate prices, I'm going to wait for that to come down. But I did rent a new place. Here's one of the rooms downstairs. So if you want to come on over, here's the other, that's the basement. So Dave, I
Oh,
really
let me
appreciate.
guess. Those are all GLD bars behind you.
Yeah, you might recognize a serial number or two. Although it's funny, I know you often bring up that story about how GLD they showed the reporter going in there. I think it
Bob
was
Pisani.
Bob Pisani, yes, who I actually met on the New York Stock Exchange because he used to be there, and I was in the option room running Susquehanna's option pit, and it was before I had heard of you, but I was into like Peter Schiff, and so I was the gold and silver guy on the options post. Everyone thought I was nuts. Maybe they still do. Yet there was one day I went over and talked to Bob Pisani about gold, and I tried. I'm like, hey, you concerned about the debt or this quantitative easing? That's a little unusual. And he just is like, wasn't into it. So
He probably didn't know how to answer the question. He doesn't understand it. There wasn't a teleprompter in front of him that he could read to answer that question.
well, that who knows? Although it was quite a pleasure meeting Courtney Reagan, who was hanging out there sometimes.
Yeah, I would have enjoyed that introduction myself.
With that said, Dave, we will keep our broadcast good and respectable. Why don't you mention real quick? I know you said that we don't know the exact timing, but for folks who would like to stay as up to date as possible, because in addition to the time you're generous enough to give each week on the show, you also write this stuff down in a journal, and which is how people can grow their gold and silver. So why don't you just mention the website and the two journals you have before we wrap up today?
Sure, investmentresearchdynamics.com. And my two newsletters are the Mining Stock Journal and the Short Sellers Journal. Short Sellers Journal's weekly. My Mining Stock Journal is bi-weekly, so twice a month. And I just want to add to that, I do not accept any sponsorships from any mining companies. All my work is my own, and most of the ideas that I present in the Mining Stock Journal, I invest in personally or in my fund. Not all of them, but most of them. And that kind of sums it up.
Well, I think that says what it needs to say, because obviously, it's one thing to talk about these things, but certainly anytime someone puts their own money behind it, and you have a comment
I know
that,
what I wanted to add. I also, I don't just put, cover stocks that I think investors should look at to buy. A lot of times I get emails from subscribers asking me to look at stocks that that haven't covered before, or I don't cover because I don't like them. And I will usually, I'll usually, especially if it's a well followed stock, I'll write an opinion on it and explain why I don't like it. So it's not all, unicorns and rainbows with mining stocks. So, and I have saved people a fair amount of money over the years in certain names. So,
well, and I can add to that. Sometimes when I'm sitting in the hot tub reading my mining stock journal, that is where I read it from, and I'll almost feel dumb by the time I'm at the end, because I've made my Fed jokes and studied silver and all that. Now learning about the silver miners, which is really all, and the gold miners too, which especially with all the geology, it's really like a new language. And every time I think I get it, then I'll read one of your journals. I'm like, I know everything, and so I mean, it's really. And I have a couple people that watch the show that I know are really into the mining stocks, but it's not the easiest thing to do if you're not spending as much time as you do doing it. So I appreciate that you share that. And Dave, where's the link for the for the investmentresearchdynamics.com? Right down there. And folks, as always, I appreciate you watching. Hope you enjoyed this one. And as I mentioned earlier, Dave is actually a chapter of a book in addition to a mining stock analyst. And to find out more about that, well, here you go.